Alright guys, so we have three big updates in this global mess, and it doesn't look good for Europe today. They are being squeezed from all sides and they are being forced to choose. And the choice is quite simple actually. Choose your own sovereignty or keep following the US to the underworld. And since the Biden administration, Europe has been making a lot of weird choices, especially against China. From sanctioning Chinese solar panels to slapping tariffs on Chinese EVs. And we can agree that the EU is in panic mode, and now China has had enough. Beijing is striking back. And they just sanctioned two banks in Europe. Now, these institutions can't do business with the organizations and individuals in China, and getting cut away from Asia's largest economy is incredibly severe and is a warning shot from Beijing. Now, this is in response to the EU sanctioning Chinese banks and companies for doing business with Russia, so it's tit for tat. It's important to note that these banks are in Lithuania. China didn't target the big names in Europe just yet, so we can assume the central government wants the EU to back down or else. So the ball is with the Commission. If von der Leyen wants to corner China further, it really won't look good here. Now, one would assume Europe should move closer to China. Certain countries like Hungary and Spain definitely are, but Washington still has a very strong grip on the entire continent, and that is despite Trump's tariff war, which is tearing Europe apart. Now, Italy is one good example. Meloni is moving to shrink Chinese investors' holdings at key Italian companies, basically to reduce Chinese footprint and so-called de-risk themselves, the common speak from the West. And why is Italy pursuing this? Because on the surface, it doesn't really make sense. Chinese money brings with it expertise and open road to Chinese markets as well. It should be a win-win, especially when the EU is going broke in a handbasket. They are bleeding a lot of money, especially during this trade war. Well, why? It's because Italy is afraid of Washington. Take Pirelli, the tire maker for example. China's state-owned Sinochem owns 37% of the company. Sounds good. Tires can be exported rather easily to Chinese markets. But it's the US markets that's causing a big headache to the brand. They are facing problems supplying F1 racing teams thanks to a sales restriction in the US. Once again, it's because of national security. The company has Chinese ownership and Trump isn't happy. I think we can see the common theme happening here. If there's Chinese presence is a threat to US national security, I can't wait for them to tariff the toilet paper industry. And I'm quite sure there are certain Chinese investors present there as well. And the same goes for Italian energy companies. They can't take on projects in the US, and it's all because of Chinese presence. It's important to remember the stranglehold Trump still has over the continent. Despite pulling away funding and imposing big tariffs, Europe still can't quit the US. Now, the EU is fighting on too many fronts here. They are about to impose the 19th package of sanctions on Russia. But will it end the war or just worsen Europe's situation? Now, this chart shows us Russia's budget revenue until 2027. Yes, oil revenue is probably going to stagnate given oil prices are now stabilized, but focus on the non oil and gas portion. Revenue there is still going strong. Russian industries outside of fossil fuels are still expanding. BRICS and China are still supporting Putin's economy. And this cuts into the fundamental disconnect between EU fantasy and reality. You have isolated yourself from Russian commodities, especially affordable energy. Then you're throwing billions into a black hole where you are getting sidelined by the Americans, and you still don't have a say in the Alaska summit. You have nothing in Anchorage. You are sacrificing your economy for nothing. We are literally seeing the end of EU industry. Now, since 2022, German exports to China have been collapsing. The biggest crash has been in auto parts and machinery. Chinese companies can self supply their own industries, and whatever Europe is selling costs more, and is the quality even better at this point, which puts Germany and other EU countries in a very difficult spot. Their products are too expensive to be sold in China. They still need to sell to the Americans. But in order to sell to US markets, they need Chinese goods to drive their input costs low enough, which means Europe can't afford to piss off Beijing either. The EU has zero leverage left in the global economy. Now, the trade deficit is all the proof that we need. Europe's deficit with China has doubled from 2020 till today. They are buying much more than they are exporting to Chinese markets. Remember that this is free trade and there are many EU tariffs on Chinese goods. What happened in 2022? All the Russian commodities got cut away and essentially diverted to Chinese manufacturing. So Europe wants to sell cars, machinery, and aircraft parts to the US. Cool, that sounds awesome. But where do you think the inputs are coming from? Now, chances are it's being shipped to Wolfsburg in Germany from a factory in Shenzhen, China. And this is the modern supply chain today. There's simply no way to work around this. So the EU is treading on thin ice, but it looks like they're about to get pressured to do the unthinkable. Scott Bessent is now telling Europe to put up or shut up, that it's time to join the US to punish Russia. By extension, that means supporting US sanctions and tariffs on the biggest economies in BRICS, namely India and China. And if that isn't a clear sign of who is really in control, I don't know what is. The EU is being manhandled by the US Treasury Secretary himself. And this is so bizarre, so humiliating, and just weird to be honest. But does Europe have a choice? Because if they don't, Trump might just double EU tariffs from 15% to 30%. And should that happen, it would decimate a ton of industries, especially the auto sector in Germany.
Two, I want to say that it is time for our European counterparts to put up or shut up. They keep saying, oh, the U.S. should do this, U.S. should do that. President Trump has put secondary sanctions or secondary tariffs on India because of their consumption of Russian oil. And the Europeans haven't done that yet. As a matter of fact, the Europeans are buying the refined products that the Indian refiners make. So we need some coordination here.
So the gloves are off. The US wants Europe to join the empire to essentially corner BRICS. He wants them to punish both China and India using their purchase of Russian oil as the excuse. The idea is simply close off EU markets by imposing big tariffs on China and India. Can you imagine that? It's not like the EU consumer is so robust and flush with cash. If the US consumer is struggling with credit card debt, EU consumers are already lying down in a coffin. Should they punish BRICS, they have to order a hammer and nails to seal the coffin, and hammer and nails will probably be made in China. Europe's reliance on BRICS Plus is tremendous here. Over 23% of EU trade is done with the global majority. In contrast, the US stands at only 16.7%. That alone should tell you following US orders is going to be a fatal mistake. BRICS is more diversified and they are truly global traders here. Dependence on Europe is less than 15%, with the US it's less than 10%. Most of BRICS trading partners are centered in Asia. And this is a high level view of the situation, but when we dive deeper, we will quickly understand why following Bessent's orders is one big trap. And if Europe gives in, they will be more dependent on the US like never before. It will be magnitudes worse than Canada and Mexico combined. The EU exports a lot of goods to BRICS Plus, nearly $450 billion. BRICS also exported $750 billion worth of stuff to Europe, but this distribution is not equal. Europe buys a lot of intermediate goods from BRICS. They bring in a ton of raw materials from China, India, and Brazil. And let's wargame this out. The US and EU starts to sanction BRICS with tariffs. BRICS will put up their own barriers as well. The end result will be quite obvious, won't it? The EU economy will crumble faster than a house of cards. Now their input costs will fly to the moon and even fewer markets to sell to. So for their own survival, I hope they don't follow Scott Bessent's plan. That is a road to hell paved with bad intentions. And speaking of economic tsunami, Trump has promised to escalate the chip war. Now, kind of sounds smart, but it's going to backfire on US tech progress. Trump is going to move tariffs on chips up from 100%, which is already ridiculous, all the way to 300%. And this is an unthinkable tax that confirms what we have been saying all along. The US wants to corner the entire chip market, not just in the design of chips, but the physical hardware itself. It's all about moving chip factories from parts of the world to the US. And we are talking about TSMC, SK Hynix, and Samsung, moving the biggest players, the biggest chip makers in Asia to the US is Trump's biggest mission. And to be honest, he probably wants the producers of chip making gear as well. We are talking about Tokyo Electron from Japan and ASML from the Netherlands. Now, the plan is to control the entire supply chain of high tech semiconductors. And here's the insidious part: the US doesn't want to grow their own companies organically. It takes too much time and it's too expensive. So the plan is to uproot companies from the world to the US, and that's the magic of printing dollars, at least for now.
But if you've made a commitment to build, or if you're in the process of building, as many are, there is no tariff. Okay? If for some reason you say you're building and you don't build, then we go back and we add it up, it accumulates, and we charge you at a later date. You have to pay, and that's a guarantee. So that's a big statement, and I think the chip companies are all coming back home.
But imagine a 300% tariff. Even if it's 100%, it's simply ridiculous. If the chip companies refuse to relocate, US tech consumers will still need the chips, especially high tech variants from Taiwan. So they will be forced to pay a big import tax to the US government, the consumers, not really the exporters. And what if the companies decide to shift to the US? Is that the ultimate solution? Well, not really. The issue is prices will cost more, and we can safely assume China will restrict rare earths as well to amp up the pressure. The US might get their own chips, but it will be very expensive and will be stuck within the country. Trying to export them out will be mission impossible. Reshoring industries does not mean an efficient operation. It's sometimes the exact opposite. And there's also another problem with expensive chips. If TSMC relocates all their plants to the US, overnight sales might not jump, consumers might actually buy less. So revenue could be taking a brutal hit. The US could also turn around and demand no chips be sold to China from their own local factories in Taiwan as well. Meanwhile, China will be rapidly wrapping up their own spending in R&D. Now, last year alone, R&D on chips hit a 20% growth rate, which is phenomenal. And overall, China's R&D spending has increased fivefold in 15 years. It's almost on par with the US. In fact, in terms of dollar for dollar spend, they're probably driving much higher output than US companies. So the US is caught in a lose-lose situation. Trump is trying to unwind the entire framework of free trade. Now, this might work if the US has an endless supply of energy, abundant minerals, and an army of robots. But as it stands, they just have none of those. And no, printing paper dollars endlessly is not a lasting strategy. But let me know what you think. Will Europe really listen to Scott Bessent? And can Trump's plan to reshore chips really work? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.